Tuesday, June 13th, market analysis, Stan Ehrlich. Good morning, 10 o'clock California time and middle of the trading day. We have a very strong day today and some gap ups with overbought conditions in the stock market indexes. The combination of overbought conditions and some gaps below the market, not only today, since we gapped up this morning, but also about a week and a half ago, from Thursday to Friday, there's a gap. Gaps are almost always closed. We've seen many gaps in the last many months created and closed. Very few, I can't remember any offhand, that weren't closed. So the odds are very strong that we will be coming down very soon because of the overbought condition and the gaps. I would not be buying at these levels. I'm expecting a short-term, minor, maybe a few days downside correction to test one of three different levels on the S&P 500. But before I go into that, I want to recap real quick. I'm showing you now 2 years worth of daily data for the S&P 500. The bear market of 2022, which lasted only 10 months from January, the beginning, to October 13th, when we had a bullish engulfing at the bottom, gigantic, beautiful ER buy signal, and the beginning of the bull market of 2023, which is in progress. And frankly, halfway there, or maybe even more, to its minimum objectives and the indexes in general. Now, the Qs, I'll get to in a moment, have already reached its minimum upside objective a week or two ago. But the spider has quite a bit to go. And the formation really isn't quite conforming to the usual head and shoulder bottom formation. So it's kind of a variation on the theme. Nevertheless, if it were correct and everything was okay, the minimum upside objective should be approximately all-time historic highs, 477. And again, minimum upside objective. I fully expect it to go significantly higher than that, maybe this year into next year. All right. At the moment, we are 83 on the RSI. The last time we were up at 83 was back in August, when we had overbought conditions for about a week. Now, we had overbought conditions of several days ago, last week, and they were alleviated for a day or so, and then they came back into overbought conditions again in the last 3 days. For all practical purposes, for the last week, week and a half, we're overbought. That's quite a bit of time, and the levels of which we're at the moment, 83 almost, are very high, and the odds are extremely high that we're about to see a downside correction. Assuming that's going to happen, and real soon, it may start today, in the next few hours. What are my choices as far as downside corrections are concerned? I don't have any bearish of any significance things to say, but there are three levels to look for. One is probably too close for the strong overbought conditions that we got, and that would be closing the gap this morning. And that's coming back down to Monday's high, which is about 434. That'll close the first gap this morning, which may go down in the books in retrospect as an exhaustion gap short term. The next level is approximately 429.5. That's around the highs, let's call it 430 or a hair below, of last week. That's the beginning of some support, and not much support. Thirdly, and more importantly, there's a gap to close at 423. Now remember, we're 37.11 at the moment, 437.11. So 23 is 13, 14-ish points lower than we are right now. That would normally take a few to maybe several days to get down that much in a, generally speaking, good bull market. We don't usually collapse super fast in bull markets. It kind of wiggles its way back down again to whatever levels it's going to end up reaching and proceeds to go up into new high ground. So I don't think it's going to take 1 or 2 days to do this. I think it's going to take a few. So again, my most likely downside objective is 423, and it might slip off even a little bit more than that. I just don't see it getting all the way down to 15, which is another major support level, and there's other stuff between 23 and 15. So looking for the beginning of a downside correction real quickly here. What about the DIA, the diamonds, the Dow Jones ETF? It has new highs or challenging the exact previous highs today from way back in January and February, where there were 3 highs, almost exactly the same prices, right here at 343 and change. So there's the high on January 13th. There's another high right in the ballpark February 1st, and again on February 14th. Resistance. It was tested, came close to it May 1st, but couldn't break through. Downside correction. Now that last downside correction, which bottomed out on May 25th, is the potential last shoulder low on a head and shoulder bottom that seems to be a good formation, but it's forming in usually the wrong place. Head and shoulder bottoms are usually at the bottom of bear markets or sizable downside corrections in a gigantic bull market. This head and shoulder bottom is pretty darn big, the first shoulder being in December. This is June, so it's half a year in size. That's not small. And it looks good. The distance between the shoulders is about the same. That's classic. The levels of the shoulders, price levels on the lows, are almost exactly the same, which is more than classic. They usually are a little bit more different than this, but these are so close together that it's almost exact. So the pattern looks good. The minimum upside objective, I'll get to in a second. Today is the day that we are breaking out classically from the head and shoulder bottom formation with a gap up above the neckline, which is the blue dashed line I just put little handles on, the little white dots. So what happens with head and shoulder bottoms when you have a gap breakout? Because there's a gap, you usually close the gap somewhere, maybe a little higher, but the stage is set for a correction. You come back down and close that gap. You're not supposed to go below the neckline anymore. One of the golden rules of this particular pattern. Sometimes you do for a day or a fraction of a day for a little bit, and it rebounds right away. Kind of like a ping pong ball being pushed underwater and let go. But staying there and for several days or more is not typical of head and shoulder bottoms, the normal way they act. So that implies that there's not much wiggle room for a correction that might go down as far as 332 to close the gap of 2.5 weeks ago, like we talked about in the spider. So this gap at 332, 333 may not get closed. And that means the one at lower levels in the spider also may not get closed. But we got a little something to watch here very carefully. Does the DIA hold at the neckline and start to go right back up again, pulling the other indexes with it? Or do the other indexes and the DIA want to go all the way back down to close the gap from 2 weeks ago and then back up? There's nothing in the books, there's nothing in the cards at the moment that tells me this is the top of any bull move and we're beginning multi-month downswing. That's not what I see. This is June, July, August, September, October. So sometime in August or September, we may see a high that I will start talking about, a 1 or 2 month decline into the October lows, like I predicted last year. That turned out to be one incredible turning point. I've researched the October lows for decades. Very reliable seasonal quote unquote trade. The other one's the Santa Claus rally I'll get to this coming Christmas. Anyway, for now, maybe a little bit more strength, but we're at levels in the various indexes that look like we could have problems and start the correction today. I'll show you the 1 minute chart on the spider. Early this morning, we hit a high. We managed to make a higher high by a small amount, and it didn't go anywhere. We managed to make another, just a few minutes ago, higher high, and it's not going anywhere. That's 3 drives to a high, if you like that phrase. And the key here is to first get below 435.5, because that'll be a new low for a few hours. Then make a new low for the day, starting to close the potential exhaustion gap at the moment in overbought conditions. That may not hold and stop at 433.90. It may drop off a little more, but if it bounces off of that, well, the first gap is closed. Let's look at the QQQs. It didn't make a new high, nor did the DIA in this last rally for the whole day. Those highs were made on the DIA and the Qs this morning. The spider managed to make tiny new highs, but not by much. It's not really that important. It's stopping at approximately the same levels so far. So the highs this morning in the DIA and the Qs could be very relevant, especially if we start to nosedive a little later today and challenge the low of the day or make new lows for the day, which aren't really very far away. Keep this in mind. We're only up 214 on the Qs, a little less than 2 points on the DIA, and 270 in the spider, none of which are a lot higher on the day. A very normal, modest to small rally at the moment. So the Qs have a gap down here at 333 to close, and we're currently trading at 362. So that's a 30-point drop, 29-point drop from where we are at the moment. They don't have a this morning gap. The Qs did manage to come down to the high of yesterday within an hour or so. This morning, no gap anymore, and then start to rally. But again, couldn't make a higher high, stalling out, starting to dip back down at the moment a little bit, minor stuff. What about the Russell 2000 I've been mentioning for the last couple of days because it's important? We have a green zone in here, which has been support and resistance since January of 22, a year and a half. We're coming up from below, and it's stopping last week around that level and a little bit higher in the level so far this morning. I like what I see in terms of resistance. I like what I see in terms of overbought a few days ago. I think, just like the other indexes, I've got reasons to believe that we're going to start a correction. With the 2000, there's also all 4 indexes have a gap from a week and a half ago. So that's the key here, that gap from a week and a half ago, I think, but the complications are, head and shoulder and the DIA and so on. All right, so I'm looking for short-term correction, nothing particularly serious, and it should be a great buying opportunity for those of you that like to trade from the long side only or investors in that kind of thing. So, futures. The S&P E-mini I start out with always. It is a futures contract as well as an index, so everything I said for the spider stands for the S&P E-mini, but the trading hours are different, so we sometimes have slightly different signals and slightly different formations, but not any major changes on a longer term basis in the two symbols. Next chart is bonds. We have an outside down day today, but it's down very little. But the higher high and lower low does create a bearish at the moment engulfing. And we could see a little bit more of a downside correction, but the bigger picture is I think this is bottoming out. The longer term bull trend line now with 5 tests on this trend line has held. And I got to watch to see if that holds, especially on a closing basis. So I don't think this bearish engulfing may even stay a bearish by the close. It may close higher. And even if it is an outside down day, I'm not getting any major sell signal out of this. We're not overbought or oversold. Nothing else is interesting. I'm looking for this market to start to head higher soon and break into the next resistance area, and then finally through 135 and higher for a major long-term bullish breakout. Now, the same commentary, but different prices, holds for the 10-year notes. Support is holding in the last 2 or 3 weeks. There's another major support area a little bit lower. Long-term bull trend line is a little below the prices we are at right now. I like what I see on a longer term basis. I'm just looking for the final key here, which would be breaking above 118 on a closing basis for a major bullish breakout. Probably the same day of the bonds breaking above their resistance level also. Next chart, crude oil. I'm bearish basically on all the energies, but we see them performing decently today on a little bit of a rally, but it isn't breaking out. It's just testing resistance above. So it needs a little bit more time before it breaks below 64 3/4, 64.5, 63.85, and then boom, down. Next chart. Heating oil. Up against resistance, probably going to stop rallying real soon. It's a low risk new short sale. I like to sell into rallies and buy into breaks. That's how you get very, very close to tops and bottoms in markets. It's risky, but if you keep your stops close, you're not going to get hurt badly. That's the important part. And when you are right, and the better you get at it, the more money you make, the bigger the profits are. So that's my style, picking turning points very close to the turning point, the highest high and the lowest low. Now, heating oil is in that position right now, close to resistance. Very low risk, and I'd be putting a stop at 2.45 probably, and it's 2.38 right now. All right, next, natural gas is almost the same. At resistance, neutral RSI, trend is down. Last signal worked very, very well. New bearish signal, got oversold and bounced a little bit. Just waiting for new lows. Next, gold, outside down day, bearish engulfing. Now, has the major trend changed in the gold market? I don't really have a strong feeling for that. I'll draw in our major bull trend line right now, and we are crossing it, and we have been crossing it for a few days. So maybe the trend is changing. We break into new low on a closing basis below 1.94 or so, and I might get a little bit more bearish all the way down to 185, 1,850 to be more precise. So that's all I can say. If we break out to the upside over the last 2 or 3 weeks of the trading range, the bull trend's continuing, and I would look for a move up to the highest highs and maybe even higher. Next chart is silver. We caught some fantastic moves here recently in silver. We got the low day on all three, frankly, in gold and silver in February and March. This was March 10th for the low in silver, bullish green engulfing ER buy signal. We got both of the highs, one on April 14th, bearish engulfing ER sell signal, and the double top second high on May 5th, sorry, with a quote unquote complimentary new short sell signal a couple of days later, and boom, down you went. The minimum downside objective on the double top was reached only for a day and a fraction, And sure enough, we have a bullish engulfing at the bottom, and we've had a very nice rally since then. Yesterday and today, a little bit of a dip, but no major problems so far. I'm looking for it to turn back up. RSI is no help. It's very, very neutral at 46. So we'll see what happens next. This buy signal obviously is still intact, but my stops move very frequently, people, and it's an automated trading system 100%. I'm just not showing you the stops after the initial yellow for the first 3 days. Stops are not hit, and they are now much higher, if not being hit, and the trade is offset already with a profit. Next chart is platinum. New lows in platinum. First day oversold again, just barely oversold, I might add. So there's room for it to drop off a little bit more. I don't have any particular great support levels that are super close. There's something in the area of 957 and significantly lower all the way down to the bottom of 913. So I think platinum will slip off a little bit more and then bounce because of the oversold condition. But I think this is a very broad double top. The first one, we got a bearish engulfing at the very top of the market. That's great. Unfortunately, we didn't get signals at the little double top right here. So platinum is a bit of a different story. And maybe it's predicting what silver and gold are going to do. So I have to watch carefully for bullish failures in gold and silver, because platinum is already starting to do something like that. And I will draw in, and I haven't as yet, the major long-term bull trend line in platinum. And there we have it. And how about that? We're smack dab at that line right now. And oversold. Bounce. That's exactly where it could bounce. I'm glad I drew the line. Next chart. High-grade copper. Higher high. Trend is down, though, lately, since December. Yeah, January, sorry, January. And I think we're about to hit a high. Resistance is starting to be tested. There's a little bit more, a little higher. We could get up maybe to 4.0. That looks very, very plausible. And then turn down. Long-term trend is still generally up, but not particularly strong. Next, grain markets, soybeans, getting extremely close to overbought. So for all practical purposes, we were there, but not quite. And a very strong up day, typical of the end of a rally. So I think it's about to turn back down again in soybeans. The trend is questionable, neutral. Support did hold the last time we were down to 1271. Significant support area. So looking for it to turn down a little bit here for the moment. In soybean oil, the trend is down and we got oversold. But now that the last 3 days were overbought, we're back up into a general area of resistance, very close to one of my resistance lines. And I think it's about to turn back down in soybean oil. I'll be looking for sell signals. Next, soybean meal. And a modest downtrend for a few months now, but the longer term is still bullish. But, you know, there are conflicting signals with bean oil and beans and so on. I suppose I should be looking for, because of the oversold conditions lasting so long in several instances here, a test of the lows, definitely 385, and maybe down to 370, 369. Next, corn, almost overbought at a resistance line, bearish resistance line, that's got a really decent history. The last time we were there, we got above it a little bit for a couple of days, but in overbought conditions, and then boom, down we went. So I think we're turning down. We might end up with a bearish engulfing at the end of the day, but we haven't got one yet. It will not be a bearish ER sell signal turning red because we didn't get overbought, but it's the closest thing to it. Next, wheat, a little bounce and a bear trend to say the least. Remember, we did get a sell signal on the top of the market at the beginning of the war back on March 8th of 22. An incredible sell signal. I mean, a series of limit up moves, some of them locked limit up all day long since the bell rang, never moved, limit up for 1-2 days before the final turning point, which we caught with the trading system ER signals. Next, and I'm still bearish on wheat. Live cattle, we had a great sell signal just a few days ago. Yesterday was a little bit of a rally, the first day, third day after the sell signal. Still bearish, looking for a move down to 164-ish and maybe down to 159 and a quarter. Taking only a few weeks to do it, 2 to 3. Trend is up, long-term trend is up, but look at the size of this rally recently in the last couple of weeks. Very large. That is the kind of rally that you see at the end of a bull market. Exhaustion strength, extreme overbought conditions up to 94. When's the last time we were up at 94 in this cattle market? Let me look here. 5 years? Almost never. And the last 5 years, we were never at 94. Boy, that looks like the end of a bull market. But all I've got is a sell signal on top so far to indicate that that could be the case, and the RSI. Okay, this is the first time I've said this. I think cattle may be topping out intermediate to long term. It may develop a bearish formation better than the simple spike top, and that's what it's called if it goes straight down now. Next chart. Lean hogs. I don't know where they came up with the idea of lean, live hogs, whatever. So up against resistance in a general sense, close to overbought, looks like it's going to turn down very soon. Next, OJ, almost oversold, exact opposite story. In support, looks like it's going to turn up very soon. Next, well, we had a sell signal yesterday in cocoa. It looked like a really good one. It wasn't. We got short when the market went up to the red dot at 3,149 and got stopped out at 3,191. So it's a day trade loss today. The signal is now null and void. It didn't work. The last sell signal worked for about a day, and that's not very good, but at least gave you some profit potential. This sell signal way back on December 28th worked for a few days. Not too bad. But this one just failed. What can I say? Also, this one here on May 26th failed. Not the greatest signals in cocoa lately. Next is cotton. Neutral, long-term, sideways, waiting for a breakout. Major resistance above, probably going to turn down and make new lows. Next, sugar. Overbought for weeks and weeks back in the beginning of April. Finally topped out, created a little bit of a double top, and is zigzagging its way down, not quite normally in a bear move. So long-term bull market still intact, but do we have more of a downside correction slowly, or was that it a few days ago and we're going to make new highs for the trend? I don't know. I'm going to shut my mouth. Next is the E-mini. Back to the beginning. Let's take a look at the indexes real quick before we leave. We're coming back up, getting toward the high of the day again on the spider. On the DIA, no new highs. On the Qs, no new highs. I stand with what I said at the beginning of this YouTube. You have a great day. Talk to you tomorrow.